Hey everybody, welcome. Happy Tuesday. Today we're going to look at exponential regression percentiles drawn over the silver price. All right, so this is the first time that we're taking a look at silver and the price of silver over the last 50 years. For those of you who aren't so familiar with the silver market, basically it behaves very similar to gold, although it's kind of levered to gold, to the gold price. It will move typically a bit faster and a bit higher than compared to what gold is doing. We can easily see that with what happened here in January of 1980. Remember, gold peaked for about 2 seconds on the COMEX in January of 1980 at $850 an ounce. Here we have silver at month end reaching $42 an ounce. And then again in 2011, April, $50 an ounce for silver, about the same time that gold was screaming towards $2,000 per troy ounce. There's also a bump here during the COVID years, which also happened with gold. But we can see particularly in 2011 and in 1980, we have a more pronounced spike in the price of silver than we have in gold. So the white metal has a lot of history from ancient Mesopotamia, Assyria, ancient Greece, ancient Israel, shekels of silver. In many documented instances from the ancient world, we see that silver was actually more often than gold used as a transactional metal, as money. Gold, of course, was used alongside silver even way back before that, tens of thousands of years before ancient times. Tribal people using gold and silver as beads and ornaments and dowries and passing along, storing wealth, passing it along from one generation to the next. But definitely gold and silver have always held a tight relationship throughout history. One thing that has happened, though, in the last 100 years, for sure, is, and we'll go through this as well, if you actually look at the ounces of silver that are held by major central banks and treasuries around the world compared to the ounces of gold, silver has mostly declined in the last 100 years, not seemed or deemed to be worth holding as a monetary metal by central banks, by government treasuries. Gold still has, as we said yesterday, depending if you're looking at the gross stock of gold or the net stock, meaning if you remove industrial usage, gold is about 1/5 or 1/6 remaining today in central banks, central bank vaults around the world. So, and that includes treasury stocks as well. So if you count all of the official gold holdings, 1/6 of all the world's gold ever mined has remained in central bank and treasury stocks even to this day. And that number, although it was higher back 100 years ago, it's much less for silver. There's basically no silver stocks that are held today by any official central banks or governments. So that's a quick primer on silver. And all I want to do today is draw the trend line that best fits the silver price over the last 50 years. Unlike with gold, unlike with Bitcoin, we're not going to go through all the different regression analyses or all the main basic 4 types of analyses: linear, logarithmic, exponential, and power. With silver, let's just pick the best one, and it's actually not a great one. That is the exponential regression trend line. So let's just draw it right now. So here we go. And as you can see here, silver price fluctuated a little bit more than gold even before this time. I'm starting from the Nixon shock, August 31st, 1971. But I've taken away all the gold-based timelines. I only have 2 here. One is Silver Thursday, and the other one is the Eurozone crisis in 2011. But very quickly here, when gold was being demonetized and it was finally being demonetized, and Americans could hold gold again. We had the Vietnam War ending, a lot of uncertainty, stagflation of the 70s in the US and the UK. Both silver and gold really, really spiked, particularly towards the end of the decade before Paul Volcker in particular took US federal funds interest rates to 22% at the start of the 1980s. We had these major, major spikes in price. So as I mentioned earlier, gold hit about $42 an ounce as of month end January 1980. And then very, very quickly, we stumbled upon this event called Silver Thursday, which was in March 1980. And then by April, the price plummeted even more. So from $42 an ounce down to $13 an ounce in April 1980. And eventually, we'll look down through the decades here. The Great Moderation, remember, as interest rates were falling, which we'll talk about during all of this period, other assets were rising, but not commodities. We fall to a low somewhere here in the 90s of the high $3 per ounce, high $3 per ounce. So that's more than a 90% retracement. You're probably getting close to a 95% retracement over 10, 12, 15 years here from this peak. And Silver Thursday was ruinous for the gentleman known as the Hunt brothers. This family tried to corner the silver market famously in the 80s. They were said to own at least roughly 1/3 of the world's silver outside of central banks at the time, 1/3. And they were levering it up. They had all sorts of new fancy instruments at the time to hold silver, to allow investors to buy silver, to trade silver. And when the bottom fell out from underneath them, they, as I understand, they still preserved their family's wealth, but they had to bankrupt a lot of companies. And basically the whole enterprise went bust. They had to sell all the silver. They even lost collateral from, I think they were in oil as well, some farming. It was disastrous for them trying to corner the silver market. And this is what markets do. They're unforgiving. Definitely don't want to try to corner a market and imagine that you're just going to profit from the rest of your life from that. It typically doesn't work out well in the free market. So they suffered a lot here, and this was the start of, as with gold, a 20-year bear, until again the great financial crisis of 2008, and then the Eurozone crisis, which is really still ongoing, but with Greece in particular and German lenders in Greece, that was really, really fueling fears in the early 2010s. April 2011, as we said, silver hit about $50 an ounce. And retraced a little bit, again, had this COVID bump, and now it's back to, as of December 31st, 2022, about $24 per troy ounce. Now, I haven't been commenting on the regression trend line this whole time, but you see where it is. You see that often the price is well above it, often the price is well under it, well above it again. And we see this R squared. Now, we don't have to go through R squared again here, but 48%, that's not a great R squared. You certainly can find well-behaved data, well-behaved trend lines with 70, 80, 90% plus R squareds. 48% isn't great, but what does it mean? It simply means that the variance of the price around the trend line is 48% less than the price around the mean, the all-time average of all the data. So it is better than the mean, but it's not a great R squared, statistically speaking. Nonetheless, we can still draw percentiles. We can still garner some information about what is happening with the silver price and what has happened in the past compared to the trend and compared to today. So let's start with our 1 sigma down and 1 sigma up bands. Again, watch our gold video from yesterday to hear more about how these standard deviations work, these percentile bands work around the trend line. But very, very briefly, anything that you see that's inside of these bands, below the top blue dotted band, above the bottom blue dotted band, anytime you see a price action happening in between these bands, it's representing 66% of the time, 2/3 of the time. So 2/3 of the time, the price is falling within these bands. And these bands are, of course, helpful because based on the trend line, we can see where price moved in the past and where it's moving today. So even though we don't have a great looking R-squared, we still have the eye test. We can see that the price generally does move up, right? It's not close to $1.52 per ounce right now. And again, most economists thought that gold would go to zero after it started to float freely in the market in the early 1970s. They were obviously wrong, like rhetorically wrong. But the price of silver is similar as well. We can tell that it certainly trends up. And even though we don't have a great exponential regression here, 48%, we can still draw bands. We can draw these trend lines. We can figure out the standard deviations around the trend line and see where we are. And you will notice that the price here today, $24 an ounce, is well within the 1 sigma standard deviation of the trend. So 1 sigma up is $29, 1 sigma down is $11 per ounce. So nothing out of the ordinary for where silver is right now. And we can also project out into the future. So let's look out, as we've been doing, to December 31st, 2030. Where does the trend line project us to? $25 an ounce. So $25 an ounce, very similar to what the price is today. But that's what the trend line predicts based on the coefficients found and all of the data found over the last 50 years, 617 months worth of data for silver, $25 an ounce. And if we make a 1 sigma move by 2030 or any time in between then, the price would need to rise above 30 in the mid 2020s here to above $38 per ounce by December 31st, 2030. Now is the time to address the silver bugs in the room. The people that, like the Hunt brothers, really believe that silver is something unique, that it's even undervalued compared to gold. We'll talk more about that tomorrow. But they really believe that it's undervalued, that it's something unique. And based on prior gold-silver ratios, the price is going to explode any day now. Well, let's just look at the 2 bumps that we've had in the last 50 years. Again, one in 1980, the other in 2011. Let's take away the 1 sigma moves. Let's put the 2 sigma moves in. So what does a 2 sigma move mean again? Well, it means that anytime you see data within these red bands, all right, below the top red band, above the bottom red band, that means you're looking at data that behaves within 95% of cases around the trend line. So around the trend line, up or down, 95% of the time, the price falls within these bands. And since we're on linear here, we can again see that percentiles are different than standard deviation around the mean, because again, standard deviation, first of all, it usually goes around the mean. And secondly, standard deviation just assumes that your data is a bell curve. But we don't need to do that in finance. We have all the data. We don't need to take samples of data. We don't need to assume a bell curve. We can just straight up plot the percentiles. So that's what I'm doing here. As I mentioned, a 2 sigma move is 95% of the time, it's actually 5% of the time if you want to be truly technical with the language, a 2 sigma move. It means you're outside of 95% of the observations. That would be a 2 sigma move. Okay, so, but let's just look. We see here that the top red line, it's way higher above the trend than the bottom red line. And why is that? Well, it's because that financial data doesn't move in a bell curve. It doesn't have a normal distribution. Typically you'll find that around the trend or even around the mean, the lower sigmas, the lower standard deviations, right? So this 2 down number, it's going to be closer to the trend, closer to the mean even than the top trend. So we see 2 sigma up now. It's way higher. So let's just go let's go to the day. We have here December 31st, 2022. Silver price is $24 per ounce. The trend is $19 an ounce. Now let's go 2 sigma up from the trend, not from the price today, but from the trend. So we see that the 2 sigma up is $59. The exponential regression is $19. What's the delta there? $40. $40. So you got to go $40 up per ounce to get to a 2 sigma move, to get outside of 95% of the observations. And to go to a 2 sigma down move, it's much less. You actually only need to fall $10. You need to fall $10 to get to a 2 sigma down move. So these bands are not equidistant. They weren't equidistant with gold. They are not equidistant with silver. They won't be equidistant with Bitcoin. They won't be equidistant with most financial assets, because financial assets do not move in a bell-like fashion, in a bell curve. They're skewed. They're skewed. In this way, the data is skewed to the downside typically. It's skewed more around the mean in a lower way. If you looked at a histogram, you'd be skewed left, but let's just say it's skewed down. As we can see, more of the data is lower than upper. So when we get to a 2 sigma move on the upside, the air is really, really rare there. It's really rare because it takes you can see that there's not much price action here. You see a lot of white space, right, between the trend line and the red line on the top. Let's take the 2 sigma down away. We see there's a lot of white space between the 2 sigma up line and the trend line. And there's just very, very few times in history where the price really makes a move at the 2 sigma trend, at the 2 sigma percentile, to get outside of 95% of the observations. So let's put 2 sigma down again, just to be crystal clear again. 95% of the time, the silver price is going to be between these red lines. And that means that 2.5% of the time it's above, and 2.5% of the time the price is below, such as here. Early 1971, you see the price, mid 1971, you see the price is $1.50 for silver, but 2 standard deviations down is about $2. So those are the percentiles. That's the trend line. And these are the percentiles that you can draw around the regression, around the trend line, to really see how rare an event has been. So now that we've gone through that, let's go back to 1980 here. Let's even zoom in through a couple decades. We had, again, a 2 sigma, started out over the all-time trend, well below it in early 1970s. Not well below it, but just below the 1 sigma down. I know I'm rounding the 2 sigma down number, but you can see that we're under $2 an ounce here in early 1970s. And then we start to be around our range, our regression that we've calculated from lifetime data from the last 50 plus years of data for silver in the mid 1970s. And then we have this big bump, this spike, just before Silver Thursday, just before the Hunt brothers lose it. This was a 2 sigma move. And if I drew a 3 sigma move, which would be outside of 99% of the observations, it would be a 3 sigma move as well. But we don't need to do that. 95% of the time out of 617 months is a lot of months, a lot of data. So though they were powerful moves, extreme moves, they weren't lasting moves, and it wasn't anything that was, you could bet the farm on. Great for you back in the 80s if you found a way to buy silver here and sell it right at the top and all the rest. But again, the gold price was at $850 an ounce for about 2 seconds in January of 1980. I'm not sure how long the silver price was at $50 here, or close to $50, $42, but I'm pretty sure it was not that long either. So very rare air up here in the late 1970s, early 1980s, and then it went into a bear market for the next 20 years as interest rates began to fall. Let's go back now to the next bump, as well as the predictions from the 2000s here. So we have the great financial crisis, a lot of uncertainty. Silver was rising in 2008, fell a little bit right after, as did gold, but then rose again. Then we have the Eurozone crisis, peaked at $50 in April 2011. Was that rare air again? Yes, it was. We were above, that was above a 2 sigma move. That was a 2 sigma move that was outside of 95% of the observations for silver. So very rare. And so here again, you have to ask yourself, when you think about, or if you hear a lot of silver bugs, even gold bugs, when they talk about silver's, going to return to historical gold-silver ratios, which again, we'll talk about tomorrow. Silver is primed for $100 breakout. all of these other things. Well, we have the data, we have the 2 sigma moves, and we see it's only moved above 2 sigma, which is a very, very rare event, twice. All right, so let's reset the zoom. It's done it here once, very powerfully, but briefly in 1980, and it's done it here fairly powerfully, but very, very briefly in early 2011. Is it higher than it was in 1971? Sure. As most markets do trend up due to central bank price inflation, it certainly is some form of an inflation hedge. But is it, the question I want you to pose to yourself is, do you think that based on the trend line, based on the data, based on the statistics, that silver looks anywhere primed to just jump above $100 an ounce and stay there? Could it do so? Absolutely. No one knows the future. No one knows the future. But we have 50 years of data here. And all the times where, say, the Hunt brothers thought that silver was going to take over the world, they owned 1/3 of the world's silver outside of central banks. Or our good friends here, Peter Schiff, Jim Rickards, hard metal economists / lawyers who, again, I don't have any problem with the monetary metal of gold or silver. But if, the claims are often that gold and silver are going to explode to the upside, and we will review some of those claims. Look at what they actually did and look at where they are today. Very briefly, outside move here. Very briefly, 2 sigma move in 2011. And it hasn't moved outside since. A 2 sigma move now in December 31st, 2022, would be $59 silver. So it's more than double. It's getting close to triple the price of silver right now. Can it happen? Sure, anything can happen. Will it happen and will it be sustained based on the trend? Not based on the current trend. It might form a new trend. Maybe the world returns to gold and silver as precious monetary metals and central banks start buying a lot of silver. Then it certainly could happen. The US government had basically a lot of the coins, and really many places around the world in the 1960s and before, were made of silver. They were silver-based coins. Today they're called junk silver. You can still collect it. It's 90% plus silver. Those coins were demonetized and phased out of the United States Mint, the United States Treasury, in the mid-60s, as with many other nations. So they don't hold silver right now, and it's been demonetized. Could it be remonetized in the future? Never say never. Absolutely it could. But the point of this is just to show the trend, to ask yourself, are these people that are trying to shill silver going to $100 or $150, gold going to $10,000, are they speaking with any authority and any understanding about the long-term trend and long-term percentiles? Because based on the actual data, based on running a regression trendline analysis, based on understanding what a 2 sigma move actually is from the trend line, I would pose to you that they are not. That's it for today. Thanks for watching. See you tomorrow.